points on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at February 4th, 2022, and the stock market is gonna go insane tomorrow. I'm telling you, what you saw today, you will probably never see again in your life. After the Facebook earnings, it was literally the worst single day drop in market cap for any stock in history, but even better now with Amazon blowing it out of the water. They didn't even really do that good, but either way, everybody liked it. This increase from after being down 7, this is now within 24 hours, the biggest stock increase in market value that anybody has ever seen. So that means tomorrow is setting up for a crazy day. We got the jobs report. We did get a 1-2 punch today. It wasn't just Facebook that was bad, so there is some things we need to talk about, but depending what happens in that jobs report, we should see a pretty crazy day, and on top of that, it means you're probably going to get a lot more volatility coming into next week. So we got a lot to talk about. I'm going to go over everything that happened in the market today, the plays that we made, and the plays that we're looking at for tomorrow, and then I have a breakdown for the jobs report and what to expect. The non-farms come out before the market opens. So that means that you will have an hour of digestion. So we'll see where the pre-market is with Amazon and all of that. But again, that will be one of the bigger catalysts for tomorrow. So let us not delay and get right into it. And just big shout out if you have been watching all of these videos, and especially if you have been positive in the chat, man. You know what we stand for. And just in general, very proud to see a lot of good behavior. So God bless you guys and thank you. Drop your thumbs up if you find it helpful, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. But as far as what you saw today, like I said, it was very historical. Very rarely do you see losses and gains in the same day to a literal historic scale of ever before. So that was very big, but like I'm talking about, there was a 1-2 punch this morning. Facebook was bad, and it really did spread into everything. Even if it wasn't directly related to Facebook, I mean, it just brought up a lot of paranoia with the volatility that we saw. And just in general, remember, people are worried about rates and just this whole idea of longer dated growth. Any of these companies that are really banking on growing in a long time and aren't really showing it right now. So that started off a lot of the downside wave. But if you did notice, we did hold some of the key levels for a very, very long time. I mean, it pretty much took a lot of work to drop below 450. And if you got the stream alert, if you heard me talking, we were talking about this 457 level, and then sure enough, it broke through and went down. But why this level is so important, because take a look, we only had that one day from the real bottom when things were really low. Then it led into this run up here on Monday, and that was one of those lows. And even when we started the next rally the next day, we really did hang out a lot around here. Now, there's even some hedge funds or even quants talking about the gamma and the levels and all that, and it may very well apply here, but just in general, the thing to note about this level is that this was really where you got extra steam from the bounce, and that is just where we started in February. So briefly, if we didn't get the Amazon earnings, you would have wiped out all of the gains for February, and we would have had a consecutive red month. So we're going to see what happens with that, but what I'm trying to show you here is that even though we did get a lot of downside pressure from Facebook, there was something else, and that was the ECB. So it may not sound too important, and it may very well be not that important in the midterm and the long run, but there was a hawkish ECB. Christine Lagarde today, she was talking about being hawkish and even raising rates. Essentially, everything we went through last month, now it's going to be happening in Europe because they are starting to price in a more hawkish central bank. Even the Bank of England today, they did raise rates. So that started a lot of it today. today, and again, it's going to affect things globally and even get ready for next week when China opens back up. But that was the second part of today. You saw us slip down, and as we broke those levels, people started to get worried, and then Amazon and then even Snapchat and the rest of the companies, they ended up saving. But Amazon really did get people excited again. And even again, like I say, Snap did have some easing and even everything in between. So we'll see what happens tomorrow. But now just understand, with moves like that and even a big data set we were looking for, it is going to have a lot of implications. So before we talk about that, just to show you a simple, pretty picture here, this is a nice chart to show you how much Meta's drop today really dwarfed everything else. Pretty much the last biggest drop you saw was Apple. September 2020, they lost 180 billion in market cap. Microsoft lost 178 in March, but we pretty much did almost $100 billion more than that. So absolutely insane. Again, you guys heard me talk about Facebook at 2018, Facebook 2018. This is why it did take the leaderboard there for a very long time up until 2020 and 2021 has came about. So I don't think I need to remind you, you're in peak volatility. But now coming into tomorrow, it is really going to be a tricky scenario. And really the main question, or the bottom line, most important thing that people are going to be looking for is, what is the Fed going to do? So whatever happens tomorrow, whether it's earnings digestion or now the non-farm payrolls, the question is, will the data bring about something that can affect what the Fed is going to do and what the market has already been pricing and what has caused all the volatility? Pretty much, do not underestimate how important Fed policy is in the middle of all of this. So to make it simple, here's our bullish outcome. Even if the report is bad, it may end up bullish. We have seen that in history over the last 2 years. But essentially, if the report is bad enough where the jobs report comes in so low that it could even question this current pace that's already priced in, and it's really bad, or it brings up questions like that, then that will end up being bullish. But now, if the report can highlight anything with inflation and those problems getting worse, that will be bearish. So this could include anything along the lines of them saying, well, this was the non-farms, and then they talk about wages, job openings, all of that. If they find a way to say, yeah, well, even though the report missed or it did better, but now it's pointing to massive inflation concerns or the issues we've already been worried about, that would end up being a bearish outcome. So given the fact that we've literally had a historic day today, I don't know what's going to happen tomorrow. It could go both ways. I'm going to be using this as my metric because that simply just makes the most sense with everything that we've seen. But like I said, we're in peak volatility, so anything could happen, and tomorrow does hold a lot of fuel to be a very crazy day, especially as it sets us up now for a lot of important catalysts as we get February kicked off. So coming into the company news and events, I got the earnings recap for you right here. Amazon, they beat on EPS by a large margin, and that was because they recorded an investment gain from Rivian, but they did not beat on revenue. And honestly, their guidance wasn't the best, but people were just happy about them raising prices and then the growth story not being over because their other segments came up. Pretty much, Amazon has an advertising business and they have a cloud business, and now this is one of those moments where it's showing growth in those other areas and they're able to make more money than the actual Amazon Prime stuff. So the price raising was good. They haven't done it since like 2018, and anytime they have, they did it 2014, the time before that. It's usually had a good trend. So Wall Street really liked that. We're going to see how they digest it in the morning. Snapchat, baby, I'm telling you, I've always loved it, but even after today, it was very good. They reported their first GAAP profit and gave even higher guidance after the last guidance was pretty low, and even analysts, they were not expecting a lot. Again, this was a very critical earnings, but what they did, it's even borderline confusing. You could really call what they did, it was a big risk. They really sandbagged the last earnings, but this was good. A lot of people are liking it. We will see what analysts say tomorrow. I do have this on the play, so we'll touch on the balance sheet. I do have something to show you with it. It's wild, but there was that. And then Ford, they failed after missing estimates and spending a lot of money. Again, it was a little bit worse than GM, especially the initial reaction, so we'll see how people take that one tomorrow. Then Clorox, they dropped 8% after saying that profits will take a bigger hit from inflation than expected, so they pretty much just warned on inflation. And then Skechers, they jumped big on a huge guidance beat. Literally, the midpoint of their guidance was higher than any analyst expectation, so that was wild. And then Unity, they're up 15% after beating on good guidance. So there was a lot of good earnings. It seemed like Ford and Clorox were probably the worst ones, but overall, Amazon saved the market. And now with Snapchat, oh, there's Pinterest too. They killed it too. Snapchat, Pinterest, a lot of these other names that were really beaten down. I mean, it did kind of show a different light on the growth story and long duration today. So that was very, very good. And then coming into the Fed here, Fed Barkin, I don't know if this was a reiteration, but another Fed comment, Fed Barkin, he says that he sees rates at 1.5 to 1.75, which is about 6 to 7 rate hikes, and he says that is about right. So market didn't really react too much. Again, there was just so much pressure and weight from everything else that these didn't really change anything, but any data set that could affect Fed decisions, that is going to be important, and that's why tomorrow and the rest of the weeks here, those are going to be key. Then coming into Facebook, Mark Zuckerberg, he told staff to focus on video as Meta stock was going down, and he said that the company is now facing unprecedented level of competition. I don't think that Facebook has really ever admitted that, so it's good for Snap, but we'll see. And then he has a scratched cornea, so his eyes were red. He said this when he addressed the staff, but he said he wasn't crying because of today's stock move. It was the scratched cornea. So just so you know, yeah, he has humor. He's a human. But there was that, and then this one, again, more Russia-Ukraine situation, but this one, it gets another twist and turn here. But the U.S. has warned now of a fake invasion from Russia, or a fake video, and they're saying that Russia was going to use a fake video that made it look like they were attacking to try to get the U.S. to provoke them and do stuff. So it's a very interesting one. Again, we've been hearing a lot from imminent attack, and now they're saying there might be a fake attack, and then we're saying you can't go back, and then even Putin's like, yo, I'm open for diplomacy now. It's getting pretty wild, but like we said, we'll wait till the Olympics are over, and we'll see some things from here on out. But oil is definitely reacting to a lot of this here and there, so even though we're in earnings season with a lot of those, keep that one in mind. And then this one's important, especially if you saw last year. We'll see if it has any other effect. You have been watching natural gas go crazy. This has to do with the weather from the beginning of the week. It's snowing a lot there in Texas, but the Texas officials said that the grid will hold this time around, and they are not expecting any crazy blackouts this time around, or power getting shut off. So we'll see what happened. And then the price of gas at the pump has now hit the highest volatility in 26 years as oil, energy, and all this is coming back up. Your gas prices are about to hit the same level as before the SPR release a couple months ago. And then this one, again, I mean, everything today was focused on Facebook and all that. I mean, the headlines were interesting, but BlackRock joined TikTok. This was breaking financial news, the hard-hitting news right here. They have made a TikTok account, and they said it's for young investors, so we'll see. God bless. But today was wild. It was straightforward to a degree, but it was just overall crazy. We are now coming towards the back end of earnings. At least the big ones have reported, but now we're coming into important data tomorrow. Then the rest of the week, it's going to be more economic versus earnings related, and then we're really going to see whether or not we get that third wave. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow. You may get mad at the first one. I mean, I love this play now. I really, really love it. Snapchat, man, I know this is a bold claim, but right now it is probably the best growth stock in the market, and it's just because of this report and because the valuation is a mess right now. So essentially, it has reported better fundamentals than when it was trading at $80, but now the stock has been beaten down to 26. So there's a very wide range, and again, even though it's a stock I like, I've talked about this, when you get that wide range, I mean, it messes up with valuation. So this is the only thing I'm worried about, but essentially, they have recorded their first net profit, and all of this is on GAAP standard, generally accepted accounting principles. So last time, where I think we saw a net income from Snapchat, or actually every single time, I don't know if it cuts it off right here. Oh, you can't see it. Hold on. But every single time that they've got a positive net income, you can see here, but it usually leads to a GAAP loss. So this is the first time that they have recorded a net income on the profit. Again, pre-income tax, everything. Some of the beats were absolutely insane. Again, this is one of the big reasons. Their estimate was $179 million. They did $326, and now this is why I'm saying saying, one of the best growth stories, because even compared to Q4 2020, they went from 460 million revenue to 900 million in revenue, but now they've pretty much grown at the same clip again from Q1 to Q4, and these were crazy comps. Again, they increased revenue by about 400 million. They were able to do the same thing here in the same period, and again, all of the guidance was bad. They were even expecting 11-cent EPS. They got 22, but again, the one thing I got to highlight here, they went positive on all GAAP metrics. The only one they didn't was EBITDA minus the depreciation and amortization, but for the most part, this is just a really different company now, and that's why I'm saying, though, it just makes it confusing given the range. Again, today looked absolutely crazy, up over 50%, but you can see you're not up too much from where we're at, and we started the year at $47. So last time they dropped from 77 down to 65, but like we're saying, the growth story is back. People are worried about long duration growth, but they did good, and it's just very rare to see an environment where Facebook is worrying or for the first time doesn't add new users, but then Snapchat is beating user expectations. So keep all of this in mind. It's going to be a crazy one. I only have shares on it, but I will be looking at plays tomorrow. I don't know if I'll add more to it. Again, I really like this report. I want to give it some time. Pretty much, if it does test these levels again after this report, I would buy in these higher $20, $30 price ranges. Otherwise, if it takes off here, I will not be adding it to the long term, but I will be looking at this for earnings plays or post earnings tomorrow. So keep that one in mind. That's the first one. Then the second one, Amazon. This one's going to be very simple, but we will probably look for some short-term plays tomorrow. If you saw the puts today, they went absolutely insane. Again, you are about to witness the exact reverse move on the upside tomorrow. So there will be a lot of premium in the morning. Be careful for that, but I have a lot of those plays that were down. We'll see where they come from here, but this one is going to be active, and essentially we want to see how it's going to trade. Is it going to be one of those earnings where it gaps up a lot? It's going to make the first move for the first 30 minutes, top out, then come down to a level and then just chill out? Or is it going to hit the top, come down, chill out for a little bit, and then break out? That would be the most ideal. And if you do see it pretty much break from the morning highs that it sets later in the day, you're probably going to get a rally towards the end of the day, and keep that one in mind. But that is this second play. And then finally, Ford. We got those Ford options. They were up today. We're going to be down on those, but I do think this is going to move a lot. It still has a decent way to go before it hits certain buy levels. Again, we bought it very cheap, so this one's going to be interesting. Again, you can look at GM as kind of a guide to how the post earnings will play, but it wasn't the best, it wasn't the worst, but I'm leaning more towards negative on Ford, so we're going to see. But if there is volatility tomorrow, there could be some good Friday options, so I hope you're ready. But those are the main plays. As far as everything else, I started the morning off with a Facebook put. I'm still actually holding it. I got some of those old leaps. I was down like 70% on them. They're now down 20%. I held them for over a year, but still holding that one. I wanted to add to it, so I grabbed the June 110 puts, way far out the money, and these are the furthest on the chain. But why I went for them, pretty much June had the least amount of premium. Anything prior to June, the contracts were up anywhere from like 300 to 600%. I think these ones at like 52. I ended up kind of chasing them a little bit, and they went crazy there in the morning. I think they were down almost at like 42. The spreads widened out, but even the ones closest to it were pretty wild. But this one was just cheap premium. I wanted to grab it. I also went for a $70 daily call to get some of the upside when the stock was down, and that went up for a little bit, but then that one ended up getting clapped. And then as the day went on and it kind of, killed the premium, you saw them chill out, I decided to go for another one. But this one was simply partly if Amazon went bad, but also if Facebook did flush. Pretty much my idea here with Facebook, I do think it will go a little bit lower here. I think you'll have a day where it might go up a little bit and come down, but pretty much it needs to really flush out from today. But when it did kind of calm down a little bit, I grabbed 20 of the next week, February 11th, the puts here at 175. Grabbed them for 8 cents, and this is just literally if it does flush and end up going crazy, and we see some of the volatility go crazy, kind of like with what you witnessed with Amazon. But those were the first plays, and then I went on to a Spotify next week. Essentially, they were dropping, and then they came back up here in the morning, and then as it was like right here, I took advantage of there. Again, just simple post-earnings play. We did get our 100% on the pre-earnings, so I decided to double dip, and simply these ones ended up going cheaper. I was able to buy 3 of these at like 65 cents here in the morning. essentially they were going for $1.20 yesterday. So now we had the stock down 12%. We knew the earnings report was bad. I mean, this one was pretty easy. Stock ended up going lower. They went up. I sold out 2 of them at $1.35. You could see they went up even to $1.90. I have one of them for free here, and they're still up about 100%. So we're still holding that one. Then we had the Deutsche Banks. I sold 20 out of 30. If you guys remember, we played the dividend buyback news, and again, it was a bank, but this one was the call right here. And we got this only a couple days ago. If you remember, I think literally we got them at like 7 cents or something like that. So it was one of those cheap out of the money plays. And again, this one had time. That's why it's able to hold up a lot better if it did make the move. But I made those free, and I still have 10 of these plays. So we got to take some profit and then hold them. And again, they have times, and it's covering the financials. And then finally, to get a sympathy for Amazon, just in case it did bad, because again, you saw the move up. If it was bad, it could have clapped it. I decided to go for a Apple sympathy play, and I bought 20 of these, the 160s at like 82 cents or something like that, or 87, excuse me, but it was pretty expensive. Again, they were already up. They were going for like 60 in the day. Thought it was a risk, but then the market started selling off. So got a 30% gain. I was going to make them free, but I didn't. So we're holding just in case we get any other volatility. I'll see where they open at tomorrow. But even if I do get clapped on those, I'm figuring a lot of those Amazon plays could kind of balance things out, because essentially Apple was just a cheap sympathy. If you saw what happened with Amazon and Facebook yesterday, it rippled across everywhere. So that's the real reason why I went with that one. But those were all the other plays. As far as everything else, again, Amazon going to be fire tomorrow. I would keep an eye on Spot. Again, we have that play for free. It was still a big drop. We'll see if they get any of the upside. Qualcomm, even Jim Liebenthal, CNBC, he said the market has it wrong on this. I mean, I kind of agree. Our plays are still holding up with the premium. So remember those plays we have, they are still up, and I think rightfully so. But watch to see how this plays out. I'm even surprised to even watch AMD. Thought I had it on one of these charts, but I want to keep my eye out for them too. They came down, but they were holding up very, very good in the morning. So watch out for that. Watch out for Pinterest. Again, they didn't do as good as Snap, but they still were able to surprise, and they were on the chopping block. So watch for that one to get crazy tomorrow. Then Roblo, they got to benefit a little bit off of the after hours there with Snap, but they did get a negative short report today, or it was an interesting one. We even reached out there. Shout out to Boomer. The chat was getting down and dirty with it. They wanted to figure it out. There was a short report, or again, like a negative article, pretty much highlighting a lot of the child safety issues with Roblox and a lot of the bad stories. The person who wrote it does not have a financial position, or at least that's what they said. So it does kind of change it a little bit. I think it gives it, I mean, it's just 50-50, but they did get bad news. The company did respond and said that that is not true, really. And they said that they have like a human review and all of that. So what do I think of it? I mean, just take it right there. You had a bad report. Some stuff, some people would say they knew. Some people say they didn't. Then you had the company responded. I mean, I think it's kind of a net neutral, but we will see what happens. That play that we got on the sympathy, totally clap. But we'll see what happens coming into earnings. And then Apple, just keep your eye after them. Again, after the move there, they were leading, but it's just essentially if they do give up, they have been a safe haven. So that's what I'm going to be watching for. Then Snapchat, going to be absolutely fire tomorrow. Clorox, again, the drop is very, very big. So if this factors into tomorrow, it could affect some defensive names, but definitely watch out for them. Deutsche Bank, again, with that and all the banks, even the Wells Fargo. We have Wells Fargo calls that are up, but just keep your eye on the banks. They're really at a breakthrough moment now. And then even IBM, we brought this play up the other day. Those plays I'm still holding. They're up 40%, but this is what we're looking for it to break out. And just in the last couple days, even though the market has been volatile, you see it right here. This is why we got it. It is a defensive name. So it was able to hold up. That was good. There's AMD. I knew I had it on there, but watch them. Watch Google. I may double dip on the plays tomorrow. If the sentiment holds up from Amazon, we really got to see the jobs report and where we go from there. But that one was a big one. And then finally, TLT and the dollar, but in a weird way, the dollar is more important now because it is moving. And this is even, you could blame oil, you could blame the dollar, but it's related to a lot of it. This push and pull is wild because remember, first time we got the rate hike announcement and tapering, the dollar was supposed to go down. Then it had this wild pop there with the volatility, but to give it back this fast, you're getting global volatility now. You're getting the ECB and everything else. So just pay attention. But if it does break any lower and get to some of these levels, we may very well start seeing the bonds move. But there was a big gap down today. It did come back down to test here, but it got the bid at the end. Surprisingly, Fed futures were kind of chill today, but but rate hike odds did go up, and that was kind of negative here with the market. We just got to see what happens to the Fed futures after the jobs report, and I'm sure we'll probably get a leading indicator, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet on. I need you to remember why you substituting, baby. But the goal loves you, all of you. I'm going to see you in the morning. Let's go.